Vipul Joshi, the Chief Financial Officer at Ideaforge, is with us to talk to us about their earnings. Vipul, a very strong show and improvement in the revenues from almost 147 crore in the 9 months of last year. You have done 210 crore already, but the margins have become a bit weaker, whether you look at the gross margins as well as the EBITDA margins. Explain to us the trajectory which we should expect going forward, both in terms of revenue and margins.
Yeah, thank you so much for the question. So basically, as we've been enumerating in our earnings call as well, that our margins are all dependent upon what product mix is getting dispatched in the particular time period. Accordingly, right now the situation is also the same. While we expect that going forward, also the gross margins would remain around 50 to 55%, and EBITDA roughly about 25 to 30% is what our expectations would be.
Okay, that's fair. But, your order book has also slipped a bit. If I look at the September to December quarter, has there been a slowdown at all in order inflow?
So if you actually look at the overall trajectory that, when we started the year, we were at about 190, but we've already done more than our last year, even in 9 months period. So a lot of order book actually flows in and we dispatch the equipment within the period, we bill it, and we'll keep building the order book as we go. What we see is the pending order book, and we expect that the order book flow should remain healthy even in the coming times.
Anything that you can let us know about the new product development and what are the opportunities? Also, what is the outlook when it comes to drone as a service, and in the North American operations, what is the outlook looking like?
Sure. So I'll bifurcate between the two questions. The first is that as we continue to progress towards our healthy product development on our current pipeline, basically all our copper platforms and the hybrid platforms both are under development for the next generation. While we also continue to put efforts behind our tactical as well as the logistics, or you can say the delivery services drone. That tactical is right now at a stage of prototyping, and we're expecting that about in a year's time we should have the product in place and ready for demonstrations and trials. Logistics drone, we are creating a healthy team based in Bangalore. We've also adopted some of the places there in Bangalore for also prototyping, as well as we're looking at about 18 to 24 months time. The logistics drones should also take some shape. When we look at our international market, is a strategy for the company to have the civil space revenue growing, and we see that the early green shoots are happening in the national market. We have now our products that have reached the market for demonstrations, and early demonstrations have already started in that particular market.
Okay, so just to scratch that point further, in terms of the product mix, how do you expect it to shape? Because right now 92% comes from defense. You did talk about uptick in civil. So let's say 12 to 18 months out, what will the revenue mix look like?
So see, right now in the near short term, obviously, since the defense is still a hungry customer who is looking to build their arsenals, we would expect that defense would dominate, but there will be a continued effort from our side to increase the share of civil, and that's the reason why even our efforts on the drone and service will take a different step in the coming year, and also we would see that the number of sites that we will be present in will increase, and because of our efforts in the international markets and the order flowing from there, should help us show more development on the civil side of things. But by and large, in the near short term, we would still believe that defense would be the largest customer.
Okay, Vipul, on that note, we let you go. Appreciate you making time and speaking with us.